What's going on, everybody? What's going on? I appreciate you all for tapping in again to another episode of the Trade for Yourself podcast. Let me get myself set up. This is the second week in a row that we are going live. Okay, this is the second week in a row that I am going live, right? Like I told you guys before, sometimes I'll be pre-recorded, sometimes I will, you know, go live, but at the end of the day, I have to make sure that I drop an episode every single week. And so, whatever way I give it to you guys, I'm going to make sure that I add value to you guys, come in and present the information that I really need to present to you guys. So again, I appreciate you all again for tapping in. Give me just a little bit more time to set up here. My Wi-Fi is acting a little crazy, but that's okay. That's okay. This was a very, very interesting, I'll say this was a very, very interesting few days in the market. The market is still trying to figure some things out, I believe, but at the end of the day, you know, the market is still doing what the market does. So, I don't want to belabor you guys' time. I won't be here too long tonight, but there's some things that I do want to highlight. So again, everybody, welcome to another episode of the Trade for Yourself podcast. Please, please, please know that my mission here is very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So make sure that you please like this, please subscribe. Make sure you hit that notification bell so you can be in the know every single time that I drop an episode. Now, today I want to talk about why investing in technology is so important. And I'm a very, very big believer in technology. And I'm going to bring some information to you guys to give you the information that I think is going to be very important in terms of helping you understand why I believe so much in technology. So I'm about to share my screen here in a second. Share my screen here in a second. And CNBC has a very, very interesting article here. This is a very, very interesting article. And this particular article is talking about how mega cap tech may be the ultimate quality play in an uncertain economy, the ETF store president suggests. So this particular article is talking about that there may be a case to bet on technology stocks even if interest rates remain higher for longer. While conventional wisdom suggests that high rates should punish the group, investors should still favor the earnings growth offered by mega cap tech stocks, according to the ETF store president Nate Geraci. Now, investors are viewing mega cap tech as a quality play, he told CNBC's ETF Edge on Monday. These companies have tangible earnings, they have cash on the balance sheet. Now, technology is currently the largest sector in the S&P 500 per FactSet, comprising nearly 30% of the index. The sector's earnings growth rate is projected to reach 23.7% for the first quarter versus 7.8% for the S&P 500 overall, according to LSEG as of Tuesday. Even if the U.S. economic slowdown takes hold, Geraci thinks that quality tech names can remain in a leadership role. In that scenario, investors want earnings, they want cash flow, they want things that they can see and feel and touch right now. I really think that it's that simple. Still, not all tech has fared equally as well in recent months, with Cathie Wood's suite of ARK funds among the most pressured names. The flagship ARK Innovation Fund, ARKK, is down 15% since the start of the year as of Wednesday's close, compared to a 9% gain in the S&P 500 during the same period. ARK Innovation's top three holdings are Tesla, Roku, and Coinbase, according to FactSet. Geraci suggests the growth-oriented group could stay on the back burner with investors for a while. we have had some inflation data that has been hotter than expected. And so investors are shying away from those speculative bets, like you see in something like ARKK. He said, I think that causes investors to rethink making bets on companies with earnings that are far out into the future. And so the couple of things I want to highlight is that, technology is the largest sector in the S&P 500. And the S&P 500 is not going to go up unless technology companies are participating. Unless technology companies are participating, the S&P 500 is not going to go higher. Okay, energy is not going to do it for you. Real estate is not going to do it for you. Utilities are not going to do it for you. Consumer staples, a couple of companies in consumer discretionary, mainly Amazon and Tesla that I believe in, which are really tech companies, to be honest with you. They're just in a different sector. When you think about other companies like Google and Meta, right? They are in another a whole nother sector as well. And so you need to understand that I'm telling you, technology is 30% of the S&P 500. And so me personally, I believe that dollar cost averaging into technology just by itself would be a very, very good way to play long-term investing over the long term, especially if you have a long-term time horizon, because the other 10 sectors in the S&P 500, they don't weigh that much on the index, and they're not going to provide as much growth as technology is. So technology is something that I believe that we need to pay attention to and something that we need to tap into over the long term. Now, I have an ETF that I want to pull up and I want to show you all. And this particular ETF is ticker symbol XLK. This ETF is ran by State Street Global Advisors. Now, this ETF tracks all of the technology companies that are in the S&P 500. So all the technology companies in the S&P 500 are housed in this particular ETF. Now, this is an ETF that I dollar cost average into every single month because I believe in technology to lead the S&P 500 and be the reason why the S&P 500 continues to move higher. Now, what's very, very important about this particular ETF? Number one, let's talk about the holdings and let's talk about the companies and the way that it's set up. Number one, it's a market cap weighted ETF, right? So meaning that the companies with the largest market caps are the ones that have the highest weighting. So you've got Microsoft, you've got Apple. Those two together are more than 43% of the ETF by itself. I'm fine with that because these are two bellwethers. These are two bellwethers in the stock market. You've got Nvidia, you've got Broadcom, you've got Salesforce, you've got AMD, Advanced Micro Devices, you've got Adobe, Qualcomm, Accenture, and Cisco Systems, along with the other technology companies in the S&P 500. Now, let's look at the performance. What has the performance been for this ETF over the last 10 years and since inception? Now, this ETF came out December 16th of 1998, right before the dot-com crisis, right before the dot-com bubble. And this in this particular ETF has given 8.88% on average. 8.88%. So pretty much 9% per year on average, including what happened during the dot-com bubble and the great financial crisis. Now, over the last 10 years, this ETF has done right at 20%. Over the last 5 years, it's done 21%. Over the last 3 years, it's done over 12.5%. And over the last year, it has done 31.2%, right? So, and year to date, but this is as of April 30th. So this is a little bit outdated because we've started off the month very strong. So this ETF is probably doing better than 2.16% year to date. We're going to look at the chart on it and we're going to kind of explain to you, what this ETF has been doing over the last, I'm gonna say year to date. We're actually going to look at what the ETF has been doing year to date. But me personally, this is just my opinion. Technology should be a large component in your particular portfolio. For me personally, I dollar cost average into this particular ETF every single month because I believe that the S&P 500 will not go higher unless technology participates in it. And just for me personally, to be completely honest with you, I invest into this ETF every single month just in case I'm wrong. And what I mean by that is that I invest into individual stocks and I also trade stocks, right? I invest into individual stocks and I trade stocks. And so what I mean by that is that I am not naive to the fact that a stock that I pick could underperform the market and it may not do what I believe that it will do, right? All of my stocks could go to zero for for any given reason, right? But holding technology as a whole and holding this particular ETF, I am 99.99% sure that I'm not going to be wrong about technology leading the S&P 500 over the long term. Will technology underperform during certain years? Yes. Will holding technology stocks allow your portfolio to be very volatile? And during times that we go into bear markets, will technology stocks underperform the S&P 500? Yes. All of those things are true. But at the end of the day, when you have a long-term time horizon, the volatility, the times that we deal with the volatility, provides you an opportunity to scoop up these stocks at a discount to be able to continue to ride them for the long term. So XLK is pretty much what I view as my safety net, just in case I happen to be wrong about a company like Tesla, just in case I happen to be wrong about a company like AMD or CrowdStrike or whatever individual stock I decide to invest in. I'm going to have my basket of technology stocks that are going to move throughout the years and may change hands a time or two, to where Microsoft and Apple, they may not be the top two anymore. It may be a stock that we may not even know. So that's just how I look at XLK, and that's just how I play it, and that's just how much I believe in technology. Now, before we get out of here, I am going to go to the chart. I am going to go to the chart and actually look at a chart of what XLK has been doing over the year, right? And so, this is pretty much a year-to-date chart. This is a daily chart, and this is a year-to-date chart of what XLK has been doing this year, okay? And so the first thing I'm going to do is what I want to do is I want to investigate. I want to investigate to see how much XLK is up year to date. So right now, XLK is up about 7.83% year to date. It's up about 7.83% year to date from where the stock opened. And the S&P is up about 9%, right? But at the 52-week high, though, XLK was up over 11.8%. Now, I believe that XLK will get back to that 52-week high. This stock is continuing to go to an is going in it go on an uptrend. In April, we had a very negative month in April, as you can see how the stock has been very volatile and had one, two, three, four, five, six. The stock had 6 consecutive down days in the month of April, and we had a negative month, for the market in the month of April. And so, technology had to bear the brunt of that. But but from a technical standpoint, this stock is still looking good. It filled some downside gaps. We just create another gap, so we may have to come down and fill this gap right here, obviously. But the stock still looks good technically. The 50-day is trading above the 100-day. The 100-day is above the 200-day. So this stock is moving up and to the right. Again, we talk about what the earnings growth has been for technology versus the S&P 500. It's not even close. And if you look at the top 10 companies in the S&P 500, you're going to see Apple, you're going to see Microsoft, you're going to see Alphabet, you're going to see Amazon, you're going to see Meta, you're going to see all of those particular stocks. Now, Meta Alphabet, and Amazon, they're not in this particular ETF because they're in different sectors, right? They're in, communication services is where Meta and Alphabet lies, and Amazon is in consumer discretionary. But at the end of the day, they're still technology stocks. They just had to put those into different sectors because they just don't want so much in technology. But at the end of the day, those are technology companies. They may not be in this particular ETF, but they're going to trade in similar fashion like the stocks do in this particular ETF. So if you just look at the top stocks by market cap and you look at their cash, you look at the amount of debt that they have, you look at the revenue, the profitability, the gross margins that they are able to generate on a quarter by quarter, year by year basis, these companies are 100% the cream of the crop and 100% the ones that we need to be investing in. And so, y'all, that's all I've got. Y'all, that's all I've got. I just wanted to come on here to make sure that I provided some value to you all and make sure that you understand why investing in technology is so important. So please do not forget to subscribe to the Trade for Yourself podcast. Please like this. Please share. Reach out to me, y'all, and let me know what technology stocks you are investing in. Do you believe in technology the way that I do? Do you believe that technology may eventually fall by the wayside? Do you believe that technology is not only just in technology companies, but companies in all sectors are utilizing technology to be able to grow and to be able to add value and be able to really truly build a sustainable business? As always, remember, don't pay for it, trade for it. I'm gonna tap them with